Hello everyone and welcome back to another portfolio update. In this update, I'm sitting at 280K inside of my Wealthsimple portfolio and I received $864 worth of dividends in the month of October here. $164 coming from VFV, 83 from VOO, 103 from VDY, 279 from ESPX, 183 from ETSX, and $51 from SBLT. So quite a good month for dividends. It's actually a record for me besides the month of January, where I get a annual payer VAQT, so it doesn't count as much. This is a very good month for dividends. Let's beat everything else year to date, so I'm really happy with that. And I'm also happy with a fourth back-to-back month of 10K increases in my portfolio. The compounding is just going ballistic. So in July, 250. August 260, September 270, and now 280. So it's just been, obviously the stock market's just been on an absolute tear recently. S&P 500 at an all-time record high. Gold going over $4,000 per troy ounce. So these are major moves that have been made in the stock market. So of course, if you have a sizable portfolio, these decent percentage changes are going to have quite a bit of a dollar value effect on your portfolio. Now, mind you, that could go the other way. If we go into a correction and we went down 10%, that would be a pretty nasty decrease in my portfolio. So you got to be able to stomach the highs and the lows. So yeah, but very pleased with how things have been rolling. Yeah, so as far as like price appreciation just on my funds, like my S&P 500 funds combined, just on price appreciation alone, up over 50%, which is quite substantial. And I can actually see on Blossom. Blossom has this really cool feature where if you go into your funds, it'll show you your price appreciation here, but if you click into it, it'll also show you the returns with dividends. So for example, for VFV, I'm up, over 60% on price appreciation, but if you have to add another almost 5% with dividends, and I'm getting close to a 70% total return from VFV alone. So this is nice. It's really good to track. This really nice to use this to track total return, especially for funds that have a higher distribution yield. So for my covered call funds like ESPX and ETSX, I'm seeing about an 18% price appreciation for ESPX, but it's got a over 10% distribution yield. So if I go into here, I want to see, what that total return looks like. And yeah, it's close to 30% actually with the dividends. So it's a pretty cool tool actually to use. So if you don't use Blossom, check it out because you can get this feature for free. Just make an account and connect to your portfolio, and you can see your returns with dividends as well. So that's gives you a more accurate picture to the performance of your portfolio. So yeah, and combined with the my registered pension plan and employee savings plan, I'm almost at 350K total. So if I go in here, my S&P 500 fund has been doing well, just the same as the my VFV and VOO. This is just this U.S. equity index fund is just the S&P 500 as well. And then my BCE shares, they've kind of just been doing whatever. It's like up, down, up, down. So yeah, don't have much to say about that. I'm down 27.26%. I'm not going to sell those shares. I'm going to wait for a bit of a recovery in there. So just going to leave those alone. I have been thinking about maybe just transferring the shares to my Wealthsimple portfolio, so then I can at least extract the dividend income and reinvest into something else that I think is going to do better. But yeah, I don't know. It's a bit of an administrative work to do that transfer, and then I can only transfer some of them without penalties. So yeah, I'll just maybe leave that for now. But it is something to consider because maybe I could be using that yield and reinvesting it somewhere else. So I like to do that in my non-registered account. If I get like all these dividends, $864, I get a decent amount, a chunk of that's in my non-registered account. I turn off drip actually in my non-registered account, and then I like to reinvest it wherever I want. So, if I see gold's down because, that bit of a correction after it went over $4,000, I can buy a bit more of those shares. In my other accounts, my registered accounts, I just leave drip on, just because it's really easy. But in my non-registered account, I like to be a little bit more opportunistic and just use those cash distributions from the funds and deploy them where I want. And a reason why I do also have that option off my non-registered account is because SBLT is in there, and I don't want to reinvest the distributions into SBLT. I don't want that position to grow. It's just going to sit at that 10K, kind of like that little bit of fixed income in my portfolio. So that's about it for this update, and I'll see you guys in the next one.